Hello, everyone. Today, we're embarking on a journey into the world of tax rate schedules, a subject that can significantly impact your financial well-being. But before we dive in, let's start with a relatable scenario that many of us have experienced. Imagine this. You receive a substantial income tax refund, and it feels like a windfall. You're ecstatic, right? But here's the catch: that refund represents an overpayment of taxes you made throughout the year. In essence, you've been lending your hard-earned money to the government, interest-free. So, how can you avoid this situation and keep more of your money in your pocket? Stick around, because we're about to reveal how to ensure precise tax payments. Welcome to Wealth Creation Gents, a personal finance channel dedicated to enhancing your financial intelligence. Now, let's switch gears for a moment and ask you a thought-provoking question. Have you ever stopped to ponder whether there's more to your tax returns than just chasing refunds? Well, you're in for a treat, because today, we're going to take you beyond the surface and help you embrace the total tax perspective. We'll dissect your federal and state income taxes, giving you a profound insight into your financial situation. 1. Embrace the total tax perspective. So, let's shift our focus from the allure of refunds to understanding the broader picture. Knowing your total tax liability for the year is the cornerstone of financial decision-making. It empowers you to make informed choices and take control of your financial future. 2. Mastering tax knowledge, your gateway to savings. Our primary aim is to empower you with the knowledge to legally reduce your tax payments and bolster your savings. Ignorance in tax matters can lead to unnecessary overpayments, and that's something we're here to change. The tax system is a complex web of incentives, designed to reward desirable financial behaviors such as retirement savings. Understanding these nuances can translate into tangible financial benefits. 3. Deciphering marginal tax rates. Now, let's dive into the heart of the matter: marginal tax rates. Contrary to popular belief, taxation isn't a one-size-fits-all affair. Your tax rate increases as your income climbs, and understanding this progressive system is vital for more intelligent financial planning. 3A Marginal tax rates and income brackets for 2023. To clarify, let's break down the 2023 marginal tax rates and income brackets. 10% for income up to $11,000. 12% for income between $11,000 and $44,725. 22% for income between $44,725 and $95,375. 24% for income between $95,375 and $182,100. 32% for income between $182,100 and $231,250. 35% for income between $231,250 and $578,125. 37% for income exceeding $578,125. 3B. Understanding tax rate schedules. Let's explore how tax rate schedules work. These schedules outline the tax rates based on your income. As your income increases, you move into higher tax brackets, resulting in a higher tax rate for that portion of your income. This system ensures a fair distribution of tax burdens. 3C. Components of tax rate schedules. The foundation of tax rate schedules rests on marginal tax rates and specific income ranges, each tied to a corresponding tax rate. For instance, you might find a 10% tax rate for income up to $11,000 and a 12% tax rate for income between $11,000 and $44,725. 3D. How tax rate schedules work. Let's illustrate this with an example. Suppose your annual income is $75,000, and your tax rate schedule comprises 3 brackets: 10%, 12%, and 22%. You'd pay 10% on income up to $11,000, 12% on income between $11,000 and $44,725, and 22% on any income above $44,725. This progressive structure ensures that your tax burden increases as your income rises. 3E. Progressive versus regressive tax rate schedules. We'll also delve into the difference between progressive and regressive tax rate schedules. Progressive taxation, like the example above, aims for fairness, while regressive taxation can exacerbate income inequality. We'll explore ongoing debates about which approach is better for economic growth and social stability. 3F. Factors affecting tax rate schedules. Tax rate schedules aren't set in stone. They can be influenced by government policies and economic conditions. Governments may adjust tax rates to stimulate growth or fund specific programs. Economic factors such as inflation or recession can also prompt changes to maintain fiscal balance. 3G. Tax planning and optimization. Understanding how tax rate schedules function empowers you to engage in effective tax planning. We'll guide you on strategically timing your income and expenses, leveraging deductions, and exploring investment opportunities to legally minimize your tax liability. 3H. Common misconceptions about tax rates. Let's debunk some common misconceptions, such as the belief that moving into a higher tax bracket means you'll take home less overall income. In reality, only the portion of your income within the higher bracket is taxed at the increased rate. 3I. Tax rate schedule calculator tools. Lastly, we'll introduce online tax calculators, user-friendly tools that estimate your tax liabilities. These tools consider your income, deductions, and credits, providing an approximation of your tax owed. 4. Unveiling state and local tax realities. Moving on, we'll explore the realm of state income taxes, which play a significant role unless you reside in tax-exempt states. Understanding these variables is crucial because certain states exempt employment income from taxation while taxing other sources. 5. Unmasking taxable income. Understanding taxable income is pivotal. Not all income is taxable, and various factors, including deductions, impact your liability. We'll cover both standard and itemized deductions, as well as how contributions to retirement plans influence your taxable income. 6. Navigating the Alternative Minimum Tax, AMT. We'll dive into the Alternative Minimum Tax, AMT, a parallel tax system that ensures individuals with significant deductions or exclusions pay a minimum percentage of taxes. Recognizing when AMT might come into play is vital for effective tax planning. 7. Analyzing the 2017 Tax Cuts and Jobs Act. Lastly, we'll analyze the 2017 Tax Cuts and Jobs Act, which brought substantial changes to the tax landscape, including reduced tax rates and alterations to deductions and credits. We'll discuss how these changes impacted individuals across different income brackets. In summary, understanding tax rate schedules is fundamental for your financial well-being. From demystifying income tax refunds to grasping the intricacies of marginal tax rates and navigating complex tax legislation, this guide equips you with the strategic knowledge needed to master tax efficiency and secure your financial future. Thank you for tuning in. If you found this video valuable, please remember to subscribe, like, comment, and share. For a more in-depth exploration, click the link below to access the free article on the Wealth Creation Gents website.